Newark Personal Lines Exam. Welcome to the quiz. What does a single limit liability coverage in an auto policy mean? Is it A, one combined limit applies to all bodily injury and property damage from one accident? Or B, there is one limit per person for bodily injury? C, the limit applies separately to each injured person? Or D, it is the minimum limit required by law? The answer is A. Single limit or combined single limit, CSL. Liability coverage provides one total dollar amount that applies to all bodily injury and property damage resulting from a single accident regardless of how many people are injured or how much property is damaged. Split limits separate bodily injury per person per accident and property damage. Separate application to each person is part of split limits. Minimum limits are set by state law, but CSL can be higher. Because CSL uses one overall limit for the entire accident, it simplifies coverage compared to split limits. Next question. What does a loss payable clause or loss payee indicate in a property policy? Is it A, the person responsible for paying the premium? Or B, the person who has an insurable interest in the property, like a lien holder? C, the independent adjuster assigned to the claim? Or D, the person to contact in case of an emergency? The answer is B. A loss payable clause or loss payee endorsement in a property insurance policy names a third party, usually a bank lender or finance company, that has a financial interest in the insured property through a loan, mortgage, or lien. In the event of a covered loss, the insurance payment is made payable to both the insured and the loss payee or directly to the loss payee to protect their financial stake and ensure the debt is satisfied. The person paying the premium is always the policyholder or insured, not the loss payee. An independent adjuster is a claims handler not involved in payment distribution. An emergency contact has no connection to claim payments. The clause specifically protects parties with an insurable interest via a secured financial position, like lien holders, which makes it the accurate description. Next question. What is the purpose of an inflation guard endorsement on a homeowner's policy? Is it A, to automatically increase the policy's liability limits annually? Or B, to adjust the dwelling coverage limit periodically to keep pace with construction costs? C, to waive the deductible for a total loss? Or D, to cover the increased value of personal property over time? The answer is B. An inflation guard endorsement is added to a homeowner's policy to automatically increase the coverage a dwelling limit at regular intervals, usually annually, by a percentage based on construction cost inflation indexes. This helps prevent underinsurance as building costs rise over time, so the policy limit keeps pace with actual replacement costs. Liability limits are separate and not typically adjusted by inflation guard. Deductible waivers are handled by different endorsements. Personal property increases may happen indirectly, but the primary focus of inflation guard is on the dwelling coverage limit. Because rising construction costs can quickly outpace fixed policy limits, this endorsement automatically adjusts coverage A to maintain adequate protection. Next question. Explain the purpose of an accidental death and dismemberment, AD&D, rider on a life insurance policy. Is it A, it pays an additional benefit if the insured dies from an illness? Or B, it provides a living benefit if the insured is diagnosed with a terminal illness? C, it pays a specified benefit for death or specific injuries resulting directly from an accident? Or D, it converts a term policy to a permanent one without evidence of insurability? The answer is C. An AD&D rider pays an additional benefit usually equal to or a multiple of the base death benefit if the insured dies or suffers specific dismemberment losses like loss of limbs or sight directly from a covered accident. Death from illness is base coverage. Living benefits are accelerated death benefits. Conversion is a separate option. Because AD&D provides extra payout for accidental death or injury, this is its purpose. Next question. A named driver exclusion endorsement has what effect on the policy? Is it A, it provides additional coverage for a listed driver? Or B, it completely eliminates all coverage, liability, and physical damage when the excluded driver is operating the vehicle? C, it lowers the premium but still provides coverage if the excluded driver has an accident? Or D, it only excludes collision coverage for that driver? The answer is B. A named driver exclusion endorsement completely removes all coverage, liability, physical damage, medical payments, etc. under the policy when the specifically named excluded driver is operating the vehicle, even if permissive use would otherwise apply. This is used for high-risk drivers in the household. It does not add coverage. It eliminates coverage, not just lowers premium with residual protection. It excludes all, not just collision. Because it voids coverage entirely when the excluded person drives. This is its effect. Next question. An insurer uses an applicant's credit information to help determine premium. This practice is regulated by which law? Is it A, the Affordable Care Act? Or B, the Fair Credit Reporting Act, FCRA? C, the Securities and Exchange Act? Or D, the Gramm-Leach-Bliley Act? The answer is B. The Fair Credit Reporting Act, FCRA, regulates how consumer credit information can be obtained, used, and shared, including by insurers for credit-based insurance scoring, and requires notice if adverse action like higher premiums is taken based on credit. Affordable Care Act is health-related. Securities Act is investments. Gramm-Leach-Bliley governs financial privacy, but FCRA specifically covers credit reports. Because FCRA protects consumers in credit use for insurance, this regulates the practice. That's it for today. Don't forget to like and subscribe. Tell us how many you scored out of 6 in the comments, and let me know what topic I should post next. Bye.